Ways to fix your credit when you have the intention to purchase a home.
I mean, this is such an important topic, and people, when you don't have financial responsibility, or we kind of just say, oh, I don't want to think about money, then we put ourselves in a situation to be not in control of our financial well-being. So watching this video means that you want to start taking responsibility for your finances. Amazing.
Exactly.
And because you want to buy a home, and so we have to put on our we have to adult now, and we have to take care of, this is what's going on with our credit. This is what I have to do because I need to be an adult. And I need to get over my fears and misconceptions about what to do to manage my money and manage my credit, because now I want to take control of that because I want to buy a home.
And we have whole series about different kind of fixing of your credit that we put it in the playlist that you can watch one by one from short to long. But here we're going to come to the quick and dirty ways to show you that how you can fix your credit if you have that intention to be a homeowner.
Now, number one, if you want to be a homeowner, you cannot have missed any payments. So while you're working on the rest of the stuff, I would plan, or if much as possible, try to do an auto pay, minimum scores for everything as much as possible.
Exactly.
So,
and the reason is one of the recent client of my wife, how much was that she...
I felt bad. I'll just give you the generalities of this client. She wanted to buy a home. They qualified in every way except she had a credit card from a makeup company where she paid it off, or so she thought, but then there was a $12 balance that didn't show up when she made her payment, and then she never got a second bill. So there was a $12 bill for makeup that became a late payment on her credit report, which means she did not qualify for the home that she wanted to buy because of a $12 lipstick purchase that didn't process when she went to go make her payment. So she thought she had made her full payment, and then it didn't process. So you felt really bad. She has to wait 2 years because of a $12 makeup situation.
Exactly. Therefore, this we wanted to picture for you how much is important that you don't have that late payment when you want to purchase a home.
Right. In her situation, if she'd had auto pay just to get that $12 off, or whatever, $5, it wouldn't have shown off as a negative. She would have, say, hey, why they take $5, and then notice what's going on. So as much as possible, automate the minimum, so therefore you never miss a payment.
What is the second thing?
Here we're going to talk about managing your credit and managing your debt. So here is where most people will focus on. So it's called the snowball effect. You can see it in many situations, many things. Many people will talk about it to where you should keep your credit as low as 30%, and then also attack any credit card that is the highest percent of interest going on there, and attack all of your high interest ones first, and then go down the line, because you want to make sure that you're attacking any credit problems with everything that you have, and you want to make sure that you're getting rid of everything with the highest amount of interest first, and then you want to go down until you get rid of all of your debt. So I would recommend getting rid of as much debt as possible. To buy a home, you want to keep it below 30%. To qualify for your maximums, you want to get your credit down to as low as possible.
Therefore, what we were talking about here is, like, let's say a number. No, if your credit limit is at $10,000, when my wife said 30%, means you try to keep your debt under the 30% of 10,000, which is 3,000 under that, 10,000 or lower.
However, even with that, if you have a lot of debt with under 3,000, you need to attack it and get rid of it, because I wouldn't recommend letting anything happen to your credit, because the more credit you have out there, if you have 5 credit cards of $3,000, that's actually $15,000, and it's affecting the debt you can afford to buy your home. So I would say attack that debt as much as possible, get rid of it as much as possible, because you want to buy a home, you want to be secure in your home and your walls and your future.
Exactly. But 3 things that we noticed, and we said it in the video of our series, was first is your credit history too. Therefore, as long as you have more credit history, like a 5 years, 10 years, longer, better, is helping you. And it happens so many times with the home buyers that unfortunately they paid whole of their life with the cash, no? And then you need to build your credit history. That is one of the first major.
So what you should
history.
do in this situation is when you have a credit, make sure that you do not just close your credit account. Like for instance, my husband, he has a JCPenney card. He got it on accident. He didn't mean to open this JCPenney card at all because he was all cash. But now he will never close his JCPenney card because if he closes the account, he loses his oldest credit card that he didn't even intend to buy. He was on the phone with me talking to the thing when they were like, sure, ring it up, and then suddenly he had a credit card because he was talking to me and on the phone when I wasn't there. So make sure you keep your old credit cards. Like he has this JCPenney one that he never uses. He's laughing because it's true.
That's true. Therefore, that was the credit history. The long credit history is going to help you at least 20 to 30% of your credit your score is your credit history.
So even if you never use it, still keep it, including that
Exactly.
card.
And the late payment, and the third thing was the credit limit that we said under the 30%.
No, the third was the credit history.
Credit history. Okay.
Next one is credit inquiries. This is
Credit inquiries. Okay. What is that?
Make sure that you're. This is a true situation we've had to clients as well recently. The more you have credit inquiries onto your loan application, the more negative it's going to appear on your credit score. So when you go to buy a car and you do not know where they're running your credit, be scared, because that is where I've had situations where this lady tried to buy a car and they ran her credit 31 times. I know interest rates are high right now, but if you let somebody run your credit 31 times in the back room when you're not there because you're thinking I need to buy a car, well, you just affected your home buying purchase, because this lady was qualified to buy a home, but those 31 inquiries on buying a home stopped her in her tracks. She cannot buy a home now until those negative inquiries go away.
Yes.
So yes, you should be shopping for the best deal, but make sure that you control who is running your credit, where are they running your credit, and don't let people run your credit 31 times like this lady did, because they took it into the back room at a car dealer and they tried to sell her car and she didn't even buy the car because she didn't like the interest rates, but they ran her credit 31 times.
Exactly. Therefore, if the financial institutions see any credit inquiries at that amount, then they think that you are financially not stable and you have a big risk for the institution. Therefore, you need to give at least 6 months to a year to prove that you are financially stable.
Next one is going to be specific to specific audiences, and this is going to qualify. This would not have been me, to be entirely honest. If you told me at 18 that my parents should put me on a credit card, that would mean that my parents would have had to get a credit card, and that would have been really dangerous for them because they were not necessarily the best financially disciplined. So them getting a credit card for me and then adding me as their 18-year-old would have been me as an 18-year-old trying to control finances, and that would have I would not have been a good authorized user because it would have been a financial mess for all of us. However, if you do have parents who control or are good at their finances, you know what I'm talking about. If like for our kids, we have a lot of financial discipline, and helping them build positive credit history is a good thing that we will do for our kids because we have financial discipline and we can show them what to do. And having them set up a credit profile means that they're building their credit so they can buy a home faster because they're going to have credit.
Exactly. And part of it is again, back to those couple things that we said, is your credit history. If even at your adult, over 20 years old, you can basically be on the credit with your siblings or your parents or somebody that trusts you. That's going to help the length of your credit history, and in overall is going to increase your credit score.
Next thing we're going to talk about is disputing credit errors. And this happens to me at least once a year. I get my credit report and I look at my credit report and I say, what is this? And because my credit's been stolen. My Social Security was completely stolen. It was a situation where they went in my purse, my social's out there. So I check my credit report pretty regularly. And whenever I see something that's not me, identity theft is a real thing, credit fraud is a real thing. Always check your credit reports, and then always dispute anything that you have no idea about. Sometimes they're just wrong. Like for instance, last year, I saw a doctor from when my daughter was born in 2016 suddenly on my report, and I was like, but I paid 100% of all the doctor bills from when this child was born. I paid $5,000 for childbirth, America, and then I paid it. We had a monthly payment, paid it all, and then suddenly there was something on there from a doctor from when child was born. So I called and said,
therefore,
what
it's
is
really
this?
crucial that you go every year to annualreport.com from the website of the government. Get your credit report for free and look into your credit history and see if there is an inquiry that you don't recognize it.
And then you have
And try
every
to
right to
fix it.
dispute it. I love the CFBC. I love talking to if there's a debt problem, I'm also going to talk to the Attorney General in my state. I'm going to talk to the the bureaus. I can put the link in the comments. But there's government websites I can talk to as well to talk about how to dispute my credit report. Because just because if I go through the automated system and the automated system says no, that doesn't make it true. And I don't want things on my credit report that are not me.
Okay, what is the next item?
Avoiding the credit scams.
Okay, this is also that
Similar.
going to different website, no?
Well, this is the fix your credit for a fee.
Exactly. I
right?
mean, many of us we saw different companies like Credit Karma.
And last time we
or-
put a video on there was lots of people trying to get your business in the comments, and they're all clear scams. When we said beware of scams, and they started spamming our comment section in our last credit video, and I deleted it all because they were looking to fix your credit for a fee. Right?
Exactly. Therefore, you need to be aware of that.
So it's better to take personal responsibility for your credit management and your credit history and do as much as you can on your own. DIYing your credit means that you have taken financial control of your credit. You can seek, of course, assistance for what to do. But I think the more you do your own, the better off you're going to be.
Exactly. But definitely when you talk to the lender, ask for their professional assistance if they work with the company or they have a way to things to help you.
And last thing we're going to talk about is always pay, at least at our bank, we always get our FICO scores. So not all banks are going to give you your FICO scores, but what's lovely when you can see your FICO score is you can see what changes happen over time.
Exactly. Therefore, this way you constantly monitoring that what your FICO score from last month to this month changed, no?
Right. So again, I'm going to talk about how taking control of your financial responsibility is the best thing to do. We're adults. We can be adult. And by taking control of our finances and our financial stability, we are taking control of our future. We can buy a home. We can do whatever we want to. We can save for retirement because we have taken financial controls under our belt and under our wing.
Exactly. I hope you found this video and podcast useful. Don't forget to call us at 252-327-3357 for our professional assistance for finding your home. And don't leave us a comment and share your story. If you have a personal story, we love to hear that.
Yeah, I like talking about all mine, so I'm happy to hear yours too.
And see you soon.